pensions and business owners. A couple of things I want to get stuck into today are, let's fire off a question.
Go on.
How can business owners use company money to reduce their corporation tax?
So if you've got a profit in your business at the end of a tax year, for example, and you don't want to pay a hefty amount of corporation tax on it, you can make a pension contribution, and that is basically reducing your profit.
Okay.
So it just takes your profit down. If you make a £10,000 pension contribution, it will reduce your profits by £10,000.
Okay.
That goes into your pension, and it's reducing your corporation tax bill.
Fair.
And you can pay up to £60,000 into a pension via a company, and then that's out of your company for profits.
Okay. So we just spoke about how company owners can use company money to reduce corporation tax. Can you give us a broad brushstroke of the benefits generally of a business owner paying into their own pension?
Yeah, so I mean, with a company pension contribution, you can pay up to the full 60,000 in. So even if you earn less than that, because other rules with pensions, if you're paying into a personal pension, you can pay in 100% of your salary. And if you're only earning 30 grand, you can only pay 30,000 into a pension. But if it's a company contribution and you're only earning 30,000, you can still pay the full 60 in. So you get bump up in the amount you can pay in, which is the annual allowance. And at the moment, that's £60,000.
Okay.
So you don't have the limits of the 100% of your salary, which is also for personal pensions.
Sure.
So you can quite quickly build up a pension over a very short space of time if you've never even had one before.
Yep.
So it's a great way to reduce your corporation tax bill, but also start funding your retirement quite significantly.
Fair dues, fair dues. So we're talking about pensions there and business owners. So again, broadly speaking, what other tax efficient investments are available to business owners?
Business owners have a tricky one.
Okay.
So personal investing is quite straightforward and you get quite lots of tax advantages there. With businesses, it can be quite tricky. So pensions are your most efficient thing that you can do in terms of moving money out of your company for corporation tax purposes. You can put money into savings and things like that as well. And there are other sort of investments you can do. But broadly speaking, it's quite limited. You don't get the tax perks that you do as an individual investor. It's all about the corporation tax.
There we go. It was good to ask. It was good to ask. So I appreciate that. And I think that pretty much covers off those core elements of how business owners can use kind of like pensions to reduce tax in different ways. So I appreciate that. Thank you.
No worries.
Good stuff.